All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. I'm jumping on video here a little bit before the market opens here today. And I don't do this very often, but video will be posted. I'll jump back on video normal time if there's a trade to be made, if there's a signal and something to be had. If there's not a signal, then I won't jump on video. Barring something major, happening out there, and then I'll be back on here this afternoon. But wanted to jump on pre-market, respond to a few things that have come in, and take a look at a few things here with you as the market's kind of preparing to open. Now the market S&P futures are down about 6 points here this morning. So we're looking at about an 8 point open lower if we include fair value. So we're looking at a red open this morning, not a massive gap or anything like that. But some of the weakness that we saw yesterday, we're seeing again here this morning. And where are we seeing that? Well, tech. Tech, it was pretty eerie yesterday to see tech as weak as it was. Now, a lot of things like a Microsoft, they snap back a little bit into the close and everything. But we really saw a hefty weakness out of tech yesterday. And, there's talk of why and all of that. In short, there always is when we see a pullback in tech. But when we see a pullback in tech that wasn't really market driven, that was very sectoral driven, makes you just kind of wonder what's going on out there. From just a money standpoint, major money, what are they looking for? I think what we saw yesterday was our first glimpse of, some real selling come into the space in a while that didn't have to do with, market fears, just general market fears. And that is a little bit concerning. We've seen it before. We've definitely seen it before, but, most times we've seen it gobbled back up, snapped back up relatively quickly, and I suspect that's what we'll see again. But I look at something like an Adobe, and I go, okay, can we go hit that 200-day moving average? Can we get a little bit of an exhaustion sell come in here, before a little bit of a turnaround? We'll kind of see how that plays out, but there is a general weakness in tech. We have Apple today, who has their product announcements and all of that. So that will affect Apple. Is it going to affect other tech names? Well, it could. It could affect Micron and some others. But where we are seeing continued strength in tech, are these semiconductors. We did not see them weak yesterday. We saw them hold up, which tells me, hey, what we're seeing is a little more temporary, and nothing massive here for the group or for the tech sector in general. So for me, tech sector, it's just about playing your individual stock, about playing your individual charts when it comes down to it, and saying, all right, you know what, you want to be a buyer of Facebook. All right, who cares about the rest of the sector? Play the Facebook chart. You want to be a buyer of Netflix, and I know both these are a little more tech consumer names. You play the Netflix chart, and whether it comes down to Microsoft or Adobe or Micron, you play that individual chart, for now. Now, is there a chance that the market breaks down here? The answer is yeah. I mean, there always is, right? There's very rarely a market where we can look at and say, well, you know what? There's just no downside risk in the market. Things are just up, 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 and away, and off they go. Market doesn't work that way, right? It doesn't work that way. Yeah, odds are strong that that path of least resistance is higher, right? But, on a day-to-day basis, week-to-week basis, there are things that can drive some oscillations here with it. I do think that the market's in a very interesting spot, and we've seen it since the gap up last week. we haven't seen a lot of buyers come in on this kind of breakaway gap. And what do I mean? Well, we saw the gap, and the gap happened, and yes, we have seen buyers come into the banks and things like that. But some of the other stocks out there, we've seen them gap up, but not really trade higher. And we've seen that with the overall market. The S&P, this kind of gap up action, but not really trade higher. Are we really seeing big money, being put to work on this? Are there strong buyers coming in? And so far, I think you have to answer overall no, right? We're not seeing, the buyers really outweigh the sellers in a big way. The bigger buyers out there have been who? They've been the shorts. The shorts have been forced to cover in a major way. And it's one of the reasons why we are seeing some of the recent laggards, your U.S. Steels, your FCXs, your Caterpillars, even your Bank of Americas. These laggards are the ones that have really led the way over the last week and a half here on the market. It's not really being led by, prior leaders this year like a Microsoft. It's being led by these shorter, or more heavily shorted names, or laggards, underperformers, however you want to call them. But your Caterpillars of the world. We talked about this a little bit yesterday. These are the ones that have led the market higher. And, that tells me that where's the buying come from? The buying has come from the shorts, saying, all right, you know what? Played for short, played for breakdown, didn't get it. I've got to come out. What that tells me is what? That tells me that the market is very susceptible to a pretty big move. The shorts, typically, they come out before the next big up move, right? But if the shorts are out and we start to move on lower, they have to get back in, and it can exaggerate the downtick. And so, as I look at it, I look and I go, okay, the next, trend action that we see in the market is likely to be pretty strong and very directional. Are we there yet? Well, market vibe shows the metrics are bullish. A lack of trade signals here for the challenge, kind of puts me at this notion of, hey, do we see more chop? Do we see more of what we saw in June, or what we saw, in July and in August? I think there's much more of a chance that we see July type action for the next little bit, at least until we start to see more out of the U.S. and China here as we go forward. Which brings me to another question that I was asked, and that is, hey, Jeff, does the lack of U.S.-China news for the next several weeks put a floor in the market? And really good question, because the fact is we're not going to, or the market's not expecting news on the U.S.-China front here this month, right? They're not going to talk till October. And so, okay, is anything new going to develop, or are things just going to happen, just tick on their merry way? And I think right now we're talking about a period where the market is expecting very little news on that China-U.S. trade front, and rightfully so. And I think that overall puts a little bit of cap on the upside and on the downside of the market. I don't think we can say it puts a floor on the market, not with recessionary signs and, some of the other stuff out there. But, is it something that is limiting the buyers? Yeah, I do think so. I think there is that element of, of fear there that still exists. But I think a lack of China news creates an environment that we could see chop around here just a little bit longer, and that's not what I want to see. It's not what I want to trade, but it's the reality of what we're seeing out there in the market right now. I think if we look at what was it last Thursday's open price on the market, and this may come into play today. But it'll take a little more selling. But if Thursday's open price on the market gets breached, I think the pullback potential significantly greater. Now, I would not be surprised to see the market pull back into this 2,900 level. I'd see it find support around that level. I'd see it start to move on higher at that level, just given everything else that's going on. And I think if you're looking to be a really aggressive buyer, I think that's one of the things you want to see is a pullback down to that level. But I think you want to see a pullback come in on very little news, on very little catalyst, just price action. Just price action, and that type of price action. Yeah, 70 points. Over a course of 4, 5, 6 days. Yeah, that's not really damning price action for the market. If it were to happen in one day, yeah, a little more ugly there. But how does it all shape up? How does it all play out? It's one where there's just not a lot for the market to sink its teeth into. It has very bullish metrics, but at the same time, if some fundamentals continue to erode, and my biggest concern with the market is a lack of catalyst. And so we'll see how it kind of shapes up, for the challenge of just looking for the next, 3-7 crossovers, and do they qualify as challenge signals? And if they do, we'll go and run with them. But a lot of me kind of looks and goes, okay, lack of challenge signals here of late. We just know what the market does when there's been a lack of challenge signals. You go back at other times where there's just been a lack of challenge signals. What happens afterwards is very just kind of up and down. Small chop, or nothing overly predictable there with it. So that's kind of how I'm looking at it until we see some of those challenge signals come in, here into the market. Last thing I take a look at here with you is gold. I think I get asked about this probably more than anything. And look, I'm not long-term I'm bullish in gold. I don't think the gold story has changed. I do think that gold needs a significant pullback. I think this is one where this last uptick in gold was much more fear related than gold fundamental related, and we need to see the fear element of gold come back out. And how is that going to happen? Is there going to be more fear, in the markets that push gold higher? There could be, but for me, for gold right now, we saw it shift on Tuesday or on Thursday last week. As long as it's making lower lows, breaking the prior day's lows, the path of least resistance is lower, right? When we have a day where it breaks the prior day's high, well, then I'll be interested to go, okay, is this significant? But until then, right? Until then, I have to assume, okay, we're just in that pullback phase, and expect a little more, on that pullback phase. I saw something, out there talking about silver, and hey, you know what? Gold might pull back, but silver is going to be strong. I don't quite buy it at all. Well, to say I don't quite buy it would be an understatement. Silver is much more economic. And I think we saw absolute monster short squeeze when it came to silver here in August, and yeah, you can see how volatile it is, right? It's significantly more volatile than gold, but for me, silver needs a little bit more of a pullback here as well. To find a spot that, hey, is, really good risk reward and says, hey, you know what, this is ready to trade. I think, one of the better places if you're looking to get some longer exposure into the area, a BHP, NGLOY, we've talked about these names, where, I think they're better names to kind of be involved in the space, though they're not direct exposure in the space, meaning, you can't look at Rio and say, well, I bought Rio, so, if gold goes up, I'm going to be good. Nah, you can't quite do that, but I think these are some of the better ways to get involved in the material space at the moment. All right. Thanks for hopping on. Again, I will be back on video here if we have any signals this morning. If not, I'll post it in the message feed either way, and then I'll be back on here with you this afternoon. Have yourselves a fantastic day, and we'll talk to you later. Take care.